And here we go. I got my brother John's getting connected up as we speak, but I will tell you this is the Rebels Edge. We are excited about today. We've had an unbelievable start to the week once again. We have these volatile markets. We talk about the macro minute all the time. I'm going to kick it off today. John's going to join in just a second, but I will tell you this about the macro minute. When you look at volatility, and we've talked about this a little bit more of late, you look at the VIX, you look at the VXN, the VXN being the volatility index of the NASDAQ itself. That's the focus for today in terms of what we are seeing in the macro. We have still seeing, despite the fact that we are up 300 plus points on the Dow today, a big turnaround day, as well for the NASDAQ turning around. Now the NASDAQ getting into that positive territory as well. To see that, and yet you are seeing volatility hold up pretty big right now. I think that is the macro minute of the day. Is volatility continues to be here. You look at that VIX still holding on to near 32. You look at the VXN a little bit higher than that, always tends to be a little bit higher. But I think that's the story of the day. How about you, John? Are you able to pop on? Are you here?
Yep, I'm here, Pete. Yeah, the high of the day, Pete, was almost 34. For the VIX today. So that's one thing that I focus on, Pete, is that's a pretty damn high VIX.
Yeah.
So that tells you, folks, anything, it's in multiples of 16. You've heard us say it before. With 2 seconds left, I'll say 16 means 1% move. 32 means 2% moves. We've already seen a 2% move today, Pete. Let's get on to Amazon. Let's get out of macro and get on to Amazon. Why? Because this is another Prime Day. Pretty soon, Pete, it'll be Prime Year. They'll just have the entire year be Prime. Because we just had a Prime Day. Amazon had a ton of sales during that, record sales, Pete. Yep. And now they are doing this again because they know they need it, right?
Yep. That is the problem. I mean, they've got to fuel themselves again, John. And so they just keep on releasing this. At some point, obviously, you just mentioned July, that was a record number. But at some point, I have to think that starts to wear down and wear off. And we'll see over time. But I will say this. A lot of names were outdoing Amazon and competing with Amazon going after this Prime Day. By the way, Deion Sanders, how do they not have him out there every single time they do Prime Day, John? He ought to be out there and singing their praises. But when you look at BJ's, when you look at Costco, when you look at Target and Walmart and so many of these big lots, everything seems to have had a pretty nice jump. And that's even when we weren't up 300 points on the Dow. Those were the names that were moving to the upside. Amazon was actually struggling a little bit. Amazon has flipped it around and turned around. It was down more than 1%. Now it's up about 1%. So that's what we're really seeing playing out right now. But it is no longer just Prime Day for Amazon. Everybody is a part of this whole thing now.
Pete, as exciting as Amazon is, and full disclosure, I am long a lot of Amazon stock. I am short a ton of calls against it because, Pete, if I were to pick my four horsemen, Amazon would be one of those four horsemen. Enough said. Let's dive into the stock that's making a huge move, which is DICE Therapeutics. You may not have seen it very often, folks, DICE, but it's $1 billion company. It went up almost 100% today, Pete, on an early psoriasis treatment. All of us know somebody who's had psoriasis. It's obviously a skin disorder that's very painful, but these guys have a very strong pipeline for treatment of that. And that's the reason we're seeing that big moonshot to the upside today.
The one piece of caution I throw out there, John, is this. It is early stage. There are only 32 patients that they're using. And there's a lot of that in the backdrop, but this is a great thing, obviously, as you're just pointing out. And I think it's very important. I do think you always have to understand that there are certain stages, stage 1, stage 2, stage 3, the final for FDA approval, all those kind of things that people go through that whole process. So that is something that's still out there. But this is a company, John, when you really look deep within the company, what I really like is they don't really have a real high cash burn. This is a company that, despite the fact that they're a biotech, they essentially have a pretty daggone good, when you look at the fundamentals, I think the fundamentals do stand out. So I'm kind of giving you a little bit of the positives and the negatives. And my one negative would be you just have to understand this is early stage. They're not even going to start the next stages until the middle. They said the first half of 2023. So people just have to keep that in the back of their mind as well.
Right. That's always good advice, Pete. And I would say I like the stock a lot. It's $1.5 billion right now after this big move that it's making. But Pete's cautionary tale there is a good one. This is one of the steps they have to make. There can be slight missteps along the way. So if you already had it, I think it's a good time to take some profits today. It's been as high as 46 during the regular session. I mean, during the pre-market. I think it's 45 in the regular session. Anyway, Pete, how about this? Ride sharing stocks. So that's Uber, that's Lyft, and of course, people that deliver things like DoorDash, DASH, all being hit because basically the Department of Labor is saying, you know what? We think these are employees. We don't think that these are contractors. And that is something that they've faced over in the UK. It's something they face in virtually every jurisdiction. How do you categorize the people that provide that service?
Yeah, it's interesting, John. I mean, they've been dealing in this, it seems like, forever. And the other thing is, and I always try to bring this one up too, John, is when we talk about these names, they got to start making money, don't they? I mean, how long has Uber been a publicly traded company now? Going into becoming a publicly traded company, that's one thing, obviously. But once you get there, at what stage are we going to see consistency of them making money? We've seen the CEO on television countless times talking about how great things are, how they're working with their folks and all the rest of this stuff. But as Kevin O'Leary would say, and I know you were just with him not long ago, John, show me the money, because they aren't showing us the money. And I think that's a bit of a problem. I want to see these guys succeed. I think they are great businesses. We all like using them, but they've got to start showing us the money by making money. And that's something that they've really struggled with for the entire time that they've been publicly traded companies.
Yeah, just quickly, folks. One of the reasons that I have to agree with Pete on this one is that Uber loses a little over $3 a share, Pete. So multiply that times all their shares, folks. It's a ton of money. Yeah. Lyft also loses about $2.30 a share times all the millions of shares that they've got out there. So those are reasons to be cautious because neither of these are brand new companies.
Right.
And they both face a lot of uphill battles like this one with the Department of Labor. All right, Pete, one more stock today. How about Roblox RBLX, one of Kathy Wood's favorite stocks for a long time, and yet a company, Barclays just started it at underweight, which isn't the greatest news for Roblox. And the stock has struggled. We've seen some buying here and there, Pete, but overall, this has been upper left to lower right for most of the last year.
And the biggest problem, John, is, this is one of the things that was pointed out to us by Barclays was, hey, look, they've gotten themselves into all these key markets. That's fantastic. So they've already had the penetration. So where is it? When is it? This is a company that's going to really show us what they've got too, right? I mean, this is kind of the consistency of what we are seeing today. It's why when we talk about these very difficult markets, you want to find companies out there that actually have sustainable business models that do have all the fundamentals that you're looking for. You and I were talking before we came out about Roblox. We were like, it's still hard to define what the hell these guys really do. I mean, okay, they're a gaming stock. All right, that's fantastic. Well, what do they really do? I mean, and when are they going to make money? I'd love to talk to Kathy about it. Like you say, I like Kathy Wood. I think she's a wonderful lady. I think that a lot of the time the problems, though, are when you're talking about stocks that are 5 years out into the future, which is a lot of the time what we are hearing from that group, it makes it really difficult now, because how difficult is it to figure out how these things are really working? But enough about that, John. I know we've got some great unusual today, so let's get after it.
Just real quick, Pete, I'll say this was $141 stock, Roblox Rblx. Right. Now on it's basically rallied back to flat on the day, Pete, which is a heavy lift, and it's a $35 stock. So that gives you an idea, when you've lost that much of your market cap that quickly in the last year. All right,
John,
Pete, by the way.
Real quick, John. the amazing thing is how many folks jumped on these things and said they were the greatest thing in the world. Oh yeah, you got to own this thing. I mean, you could go through so many different names where we had that, and you and I would sit there and just go, really? I mean, honestly, really? They don't make money. They're burning cash. They aren't really going the direction that everybody says, but you know what? It's great to buy. You do not want to buy high and sell low. And that's what so many people get caught in that trap. And that's exactly, matter of fact, this would probably be the time to maybe scratch your head and look at Roblox. Look, I'm not saying buy, but look at it. Now is the time. Not when it's 125, 135 bucks a share and it's bleeding cash and everybody's wondering, well, what do these guys really do? They're still wondering that. But anyway, that's enough of that.
To Pete's point, they lose about $1 a share. All right, enough said. Let's talk, Pete, just for a second about Web3. I'm out here in Vegas. That's my badge. I'm a speaker out here at the Web3 conference. It's NFTs. It's all the next version of the internet and what it's going to mean. We'll have a whole segment on that in the future, Pete. But yeah, let's get to unusual activity. Sure. Mine is Tesla today, and it's Tesla puts, but it's not what you think. I don't think that this is a bad thing, Pete. I think what we're looking at here with Tesla, as they're ringing to try to come in my room to do the make up the room. But Pete, it's Tesla puts, and they're buying the January 140 puts. Now you tell me, folks, if you thought the stock was going to decline, would you buy the 140 puts with the stock trading $221 a share? That's $81 out of the money. So in other words, yeah, you're protected from 140 on down, but is that really the play? Or is this, Pete, more of a, you know what? I want a disaster protection, but I think the stock's going up. So I'm going to have a little disaster protection. So I make sure I didn't turn my riches into a really small nut. I want to say, I'm going to bet on Elon Musk and I'm going to use these puts to hold on through the ups and downs of this Twitter deal. That's what I think this is, Pete.
I think you're exactly right, John. That's the difficult part oftentimes when we see some of the unusual option activity that we do see. And we know if they're buying, we know if they're selling. We hear a lot of people, John, that'll talk about volumes. Volumes are meaningless unless you know if it's bought or sold. And there are plenty of clowns out there who will say, well, these things were bought. No, they weren't. They were sold. That was a buy right, you bozo. They bought calls or they bought stock and they sold these calls. But in this particular case, John, I think you're right. I think they're looking for something to get a little of that protection. So now I'm going to jump on to mine, John. Chimera. Right. Now, this one's pretty interesting. It's a REIT. It's a mortgage assets. These guys could be in trouble. And I say that for multiple reasons, John. I mean, you and I both know what's going on in the mortgage markets. And the squeeze is on, and it's a very difficult time. Housing's going to be very interesting. These rates have changed dramatically. The 30-year was under 3%. Now you're looking at something close to 6, maybe even higher percent. All of that sort of plays into what we're looking at here. So not too terribly long ago, September 20th, we had a buyer of 25,000 of the March 6 puts. They paid 37 cents. Today they're selling those puts for $3 or for, $1.60. A big gain, right? And that was with the stock trading at 7:30. Today, stock's trading a little bit around 5. It actually hit 52-week lows below $5 a share, which get very interesting fast. It's back above that now, but they're buying puts again. They bought 25,000, ironic, right? Because they sold the 25,000. Now they're buying 25,000 of the March 5 puts. They're paying about $1. The good news is this: the stock has risen with the markets a little bit. So now as the stock's trading closer to 550 again, now those options are about 70 cents. I bought those calls or those puts, John, because I look at this name and I'm looking all the way out to March. Usually I wouldn't do this, but for 70 cents, I think it's worth it because I'm looking at this and I'm thinking, you know what? This could go bankrupt, or this could be a stock that breaks under 5 and breaks dramatically to the downside. I like the odds, I like the size, and I like the fact that a winning trade got rolled into another trade. All of that sort of screams to me, hey, look, maybe pay attention to what's going on here and in those mortgage rates and what's going on with these rates. So that's why I really enjoyed and liked seeing this trade today.
Yeah, and I'm giving it a thumbs down too, Pete. Yeah. And the reason is simple. I own a bunch of puts in these mortgage companies, because as mortgage rates push towards 6, and in some cases around the country already over 6 for people that don't have just perfect credit, that means people either A, can't afford or will not refi at that level after knowing that they could have done it last year at under 3%. So these guys own a portfolio of mortgages. What does that sound like, Pete? That kind of sounds like 2008, doesn't it?
It does. It does. It
So
sounds just
that's
like
my
it.
reason for saying I'm in with Pete on the puts on this one. All right, Pete. Gosh, we had some great football over the weekend and even last night. So I'll let you take it off with the sports end of the Rebel Edge.
All right, so we're going to hit a little NFL, but I'm not going to talk about last night's game, except for the fact that one of those teams I think still has a chance. Now, here's what I wanted to throw out to you. What 1-4 teams right now in the NFL still have a chance to maybe get to the playoffs? Who doesn't? Well, Pittsburgh right now, they're beat up. They've got missing players all over the place right now, John. Because of that, they have confusion at quarterback. Your old quarterback, Trubisky, terrible. And then you have to go to the first-round pick, but a brand-new guy. He's not really starting off so great. He's got a little bit of pressure. That team is just beat up. Houston, they're 1-3-1. They might as well be 1-4. That's another team, John. There is nothing about Houston that I think impresses anybody. So it's a very depressing situation. Obviously, the Deshaun Watson thing in the offseason, all of that. Then you got the Washington Redskins or Commanders or whatever the hell they want to call themselves.
Whatever they want to call themselves this week.
But they've got no quarterback, obviously. They got a pathetic defense. I unfortunately think our friend Ron Rivera is not on the hot seat. I think that seat's going to start burning pretty soon. So that's likely going to happen, and he's going to be gone. Detroit, they're a 1-4 team. I like Detroit. You don't win games unless you have some kind of defense. Detroit has the worst defense in the entire NFL right now. And by the way, the offense, they got shut out this past week. So I'm starting to lose a little bit of faith in what's going on in Detroit. Still love them, but that defense has been bad in every single game this year. Carolina, they don't have a quarterback. They don't have a head coach anymore. They got problems in Carolina, John, because our good friend Tepper said, adios, amigos. So that brings me down to the last 1-4 team, the Las Vegas Raiders. And I think
that's right, baby, the Raiders.
I think the Raiders are a team that's 1-4. They sure look a lot better than a 1-4 team. They lost last night to the Kansas City Chiefs by a point. And when you really get a chance to watch Josh Jacobs play, he can catch the ball. He can run with the ball. The kid is absolutely phenomenal. I think Derek Carr is really starting to warm up and get a little bit better, a little bit more comfortable with Devontae as well. So I think that team has a lot to really hook your hands into and say, you know what, these guys could make a turn and start making a move maybe to the upside in the NFL. What do you think?
Yeah, absolutely, Pete. I watched the whole thing on the game on the flight last night out here to Vegas. And wow, Devontae, you can see why Green Bay misses him. And again, they don't support Aaron Rodgers like Tom Brady gets supported with an offensive line that's healthy. Because if Brady was getting banged up like Rodgers does, he wouldn't be the GOAT that he is. And Brady has better targets usually than they've given Aaron Rodgers, because when Devontae left, that purse, Pete, is empty. But I'll say that, you know what, Mahomes, that was one of the performances of a lifetime last night. They're down 17-zip. They come roaring back. He fired a ball, Pete, 30 yards where he's about to get tackled and he can't go overhead. He's got to just basically flick it from his sidearm, and he flicked it 30 yards, hits the guy right between the numbers for a must-have first down. And, you know, the guy is just amazing. And then, you know, Travis Kelce, what can you say about him? 4 TDs last night. And that's one thing, Pete, that I question about the Raiders is they can't play defense. Yeah. They couldn't stop him at all. Yeah. I mean, they scored virtually every time they had the ball, especially in the second half when they needed to win. So, yeah, that's a tough one. But I liked what I saw on offense, and they had flashes of goodness, not greatness, goodness on defense.
Yeah, I think you're right about that, John. And that would be the one concern. And it's also why they're 1-4. His defense just can't stand up. All right, so our next one, John, is this. Dak Prescott Should he be the quarterback of the Dallas Cowboys? They gave him all this money, and he started off the year in week one. He ends up getting hurt fairly early, but in week one, Johnny was 48% on his completion rate, and he had no touchdowns and an interception, which has kind of been his way of play, it seems like, for a while now. And for whatever reason, they've fallen in love with Dak. Dak has shown signs, and he's had a year here or there where he's been pretty good. I would not say a year or here or there where he's been great, but they gave him money like as if he's great. Now all of a sudden, John, you get Cooper Rush out of what? See, is he from Michigan? Yeah, he is, but not the University of Michigan, not Michigan State. He's from Central Michigan, the big powerhouse that everybody knows that school, right? I mean,
Chippewas?
They're fighting for the national title every year. Anyway, Cooper Rush, I was lucky enough to do one of his games back in the past for ESPN. The kid comes in there. He's 61% through 4 games, John. He's got 4 touchdowns or 5 touchdowns, whatever it is, no interceptions. But here's what's really cool. Here's a guy who steps into the shoes. He has not played great, but he has done what he's supposed to do. Don't turn the ball over. Try to move the ball downfield. Try to occupy time and give the offense just enough points to win. Well, has he done that? Here's how it looks, John. He beat the Bengals at home. That's a pretty big one because the Cincinnati Bengals are a damn good AFC team. Then he goes on the road against one of their divisional rivals, the Giants, on the road. The Giants, by the way, pretty daggone good football team. They won.
4-1.
They gave them their loss. So that's not so bad. Then they get the Washington whatever team that they are. They beat them. That's pretty impressive. And then, by the way, you go out to LA, you go to SoFi Stadium, and who do you beat but the LA Rams? Everybody loves the Rams. They won the Super Bowl. This guy, Cooper Rush, is unbelievable, and the defense is helping him out a lot. They had 3 turnovers in the game. They had forced 3 turnovers for LA, and they had 0 turnovers for Dallas. That's why I think Cooper Rush is having success. He's not forcing the ball. He's not forcing anything. He's getting the ball once in a while in the air. They were not strong on offense, John. That's not what I'm saying. But he's not turning over the ball. They're not doing stupid things. And the defense is good enough that if they can do that, they can win football games. They've won 4. What do you think?
Well, I'd say it shows, Pete, how well they draft generally in Dallas, because certainly the Herschel Walker trade made that franchise. It totally made that franchise when they got all those players from the Vikings. Stupid when they made that trade. The Vikings stupid. The Cowboys smart. But they draft really well. Romo's out of Eastern Illinois, Pete. You just described the now quarterback from Central Michigan. So you're out there really, beating the bushes for the best players you can find. And let's not forget, Romo, came, just like a heartbeat away from winning Super Bowls when he was there. And they just, unfortunately for him, Emmitt Smith was gone virtually when he gets there because, he's a Troy Aikman and all those, legacy teams. But I think this guy has what they need, Pete. And I would not start Dak Prescott. I would not, but I suspect that they are.
Yeah. They're almost going to have to. They're going to have to give some excuse why. And maybe they can actually stretch it out and say, well, we'd like him to get healthier, which is what they might have to do. And, Jerry Jones might not be happy doing that, but that's what he's likely going to do is just keep extending it out because Cooper Rush, how do you pull him now? How do you pull him after going 4-0? I don't know.
The fans will crucify him if he does.
Yeah.
All right, folks. Thank you for joining us. I am John Najarian. I'm out here in Vegas at the Web3 Expo. I'll be out here for another day tomorrow, and then I go down to New Orleans. So I'll be coming to you guys live from a conference at New Orleans. This is my big tour, Pete, around the country. I know you're glad it's not you and it's me.
I'm glad it is you and not me, but I'll tell you this. I should have said this, but I have a great friend, a Market Rebellion friend who lives not far from me, but 40 minutes or so drive. And he's nice enough to open up his home to me. I can work out of here. I have still no internet, no cell, you name it. I don't have it, but it's all good. And I'm happy for, the fact that we've got all these great workers out here, John. Unbelievable what's going on in Florida here and how much they are just getting done every single day. It's amazing.
Yeah, you guys keep an eye on that and then see which state you'd like to live in because, you know, for a hurricane of this strength and for Florida to be coming back strong as much as they are, that's a testament to the people as well as the leadership, Pete.
Yeah,
so, folks, just one last shameless plug. I'll be back with 3 p.m. today. And at the market close, we'll be having a special free webinar. If you go to Market Rebellion, you can sign up now. So go to Market Rebellion, sign up for that free webinar. We'll hold it to 40 minutes or an hour. And if you sign up, you'll also get a copy of the video so you can watch it again and again. You don't have to write as fast as you can and take notes. Thank you, folks, for tuning in today. Pete and I will see you on Thursday, 1 p.m. Eastern Time for The Rebel's Edge.